few investors fully understand how the low-income housing tax credit, or LIHTC, works. Likewise with historic tax credits. So today we brought in Brian Seidensticker. He's the founder of Tax Sale Resources at Mount North Capital. And he loves niche within a niche within a niche investing strategies, which I love too. I'm a huge believer that the riches are in the niches. And that's one of the things that we do in our co-investing club. Like, yes, we go, cast a wide net, and we go shallow and wide with investing in a lot of different things, but each person that we invest with is a master of their one niche. So, Brian, walk us through, first, just the high level overview of how LIHTC and historic tax credits work in real estate.
Yeah. Okay. So very high level, right? It's all right. If a developer, right, and then the incentive right now is creating housing. I think most people hear about the shortage in housing, and so a way that the government is trying to combat that is through offering these tax credits to developers that are willing to build housing, right, for whatever segment of the population that they want to target. And so on the low income housing, right, there's a lot of rules. We don't need to go into the rules, but the developer says, hey, I have this project. It's going to cost me $10 million to develop, and then they got to raise funds to build that project. And what the government has said is, tell you what, we have a couple different programs, right? The highest program is called a 9% program. And so you can get 9% of whatever your total build cost is. So what, $900,000 a year, we'll give you in tax credits. What people don't know is that it lasts for 10 years. And so you don't get 900,000, you get basically 9 million of that 10 million, over a 10-year period. Obviously that, can be paid, is essentially handed out. Now what the developer can do, and this is also fairly unknown, is they turn around and sell those tax credits, right? They don't sell dollar for dollar, right? Usually it's 85 cents on the dollar. And so instead of getting $900,000, then developer's getting $800,000 that year, right? But the person that bought that tax credit gets $900,000 in tax credit, right? And so they get a 15-20% discount on the taxes they would normally pay. And that's how different parties can participate, right? As if you are somebody that has a fairly positive net income and you owe a lot of taxes, then you're not going to eliminate your taxes in doing this, but you can reduce the taxes that you're paying by 15-20% by buying these tax credits. And then if you're obviously a developer on that side, then it's a way that you can fund your project and participating in that program.
Gotcha. Okay. And so what is the strategy that you guys use moving forward with LIHTC, historic tax credits, or do you not mess around personally in this space at all?
Well, we're on the developer side of those items. And so, it's similar, right? We didn't talk about the historical tax credits. We've seen this more often, or we participate in this more often, where if you are doing a project on an older building, and each state has slightly different rules, but let's say it's over 50 years old, then you get a similar tax credit. It's not as much, it's 20 to 40% of your project cost, but that's significant, right? If you're talking about $1 million renovation on an old school that we're turning into a housing scenario, then you get 40% of that cost as a tax credit that we actually use ourselves. We don't sell those tax credits, but that is one mechanism that we utilize. Now, we didn't dive into on this one, but if they've listened to another episode I've in, we obviously come from the tax sale space. And so we find a lot of tax sale properties end up in that low income, qualified census tract or historical building, like older building that is, too expensive to remodel traditionally. But if you start roping in these, very unique funding mechanisms or refund mechanisms like historical tax credits, it makes a project make sense where it otherwise didn't. And that's how we end up in, is more about a necessity with these assets that we purchased, that we now have intent of completing the project utilizing those tools that are available.
Now, can anyone buy these tax credits? I mean, can on the secondary market? I mean, can individuals buy them? Do you have to be a business to buy them? How does that work?
Yeah, well, there's no rules as far as who can buy them. It's a simple form that is assigning them, right, to another individual or corporation. It can be either. What I'm not aware of, I'm sure there are, I'll say, brokers of these types of things out there. We haven't worked with any of them, but I know, and I've heard of folks that specialize in that. And so I guess it's just getting to know the right person that has access to somebody else that generated these tax credits and needs to sell them. There's plenty of folks that are doing projects, and that's how they raise the money in order to fund their development project. And so they are being sold on a massive scale, and it will be roughly 12% more next year because of the I guess the recent tax bill that was passed included an increase in allocation, because each state gets to choose. They get so many dollars in these tax credits they get to dish out, and then they get to choose which projects are approved or not, and that's decided by the population of that state. And the amount that they get to dish out is going up. I think, don't quote me on this, I don't know what the final number is, but I think it was like 12.5% higher. They increase that next year, which is typically it goes up 2 or 3% a year. So it's going to be a jump in the amount of this allocation that is available, which means there's going to be a lot more tax credits out there to purchase than usual.
Yeah, we've done 1 or 2 LIHTC investments in the co-investing club, and one of them that was particularly fascinating to me was for this property. One of the conditions of the property remaining, keeping its LIHTC tax credit, was that it restricted the percentage of residents' income, that could go towards their rent at the property.
Mm-hmm.
So the operator came in and they said, all right, well, we're going to use this loophole. This strategy is called the Section 8 overhang strategy, by the way. So they came in and they non-renewed all the cash tenants, and they put in Section 8 tenants, knowing that the cash portion of each Section 8 tenant would be way, that would still qualify for the LIHTC limitations on that, even though they're still collecting market or even above market rents, in total, right, including the government's portion. So they were able to keep the LIHTC, the low income housing tax credit, while still collecting full market rents. So they bought the property at a discount because of the alleged limited cash flow to the property, and then they found a way of getting back up to market cash flow for the property. So I thought that was rather clever of them.
Very clever.
I've only heard of a couple operators working that loophole, the Section 8 overhang loophole. But yeah, I thought that was pretty clever. Anyway, Brian, any final thoughts on LIHTC or historical tax credits, or ways to niche ways to make money in this space?
Yeah, well, I guess my one thing would be I am not an expert as far as I don't teach people how to get into that. You definitely need to have the right team, from an accounting perspective and attorney perspective, in order to participate in how we participate in them. We rely very heavily on them. I'm sure if you want to find out, where you could purchase some of these, tax credits, there's probably resources out there that's just not us, right? So hop on ChatGPT or Gemini or Grok or any of those tools out there, or old fashioned. This is sad to say, old fashioned. Google it. But yes, I'm sure there's many resources out there if you want to learn more.
Yeah, and Brian, in 30 seconds or less, how do you and your company help people, and how can people connect with you if they want to take you up on that help?
Well, traditionally, we're a provider in the tax sale space. So whether you want to participate in auctions yourself, whether they're tax liens, tax deeds, we probably have the tools available to you. Or if you want to maybe participate passively, we do run a fund. And so if you're interested in either of those things, you can actually go to our website, taxsaleresources.com. There's a phone number on there. Give us a phone call. There's actually a real person on our end, and just say, hey, I saw Brian Seidensticker on the podcast. I'd like to connect with them on such and such, and they'll get you in touch with me.
Love it. Guys, if you got a fresh perspective from this episode, please subscribe to the show, pay it forward to friends, family members, colleagues, neighbors. And if you didn't get anything out of it, then email us. Tell us why. Tell us what you're looking to hear. support@sparkrental.com. And lastly, join us in the co-investing club. We are a community of investors. We get together every single month. We vet new investments. And if you're not familiar with how passive real estate investments work, check out our free course, sparkrental.com/free. It's quick and punchy. And in the meantime, stay weird, unconventional investor.